Hi there, I'm Pedro from Investing in the Web. So, if you're looking for the best platforms or digital banks to earn interest on your euros, you're in the right place. At investingintheweb.com, we basically compare and review hundreds of different investment platforms and financial services, and we also uncover some platforms that you might want to avoid. Today, we are focusing on international digital banks and online brokers. We won't cover national banks, so definitely check out what your local bank has to offer. Sometimes local banks in your countries have tax advantages, savings plans that are worth considering. So for those looking for international alternatives, we have actually compared various providers based on their fees, interest rates, deposit limits, safety of your deposits, and more. You can check out our detailed article linked below for a comprehensive comparison. So now let's get into the topics. Here is our quick summary. So our overall recommendation goes to Trade Republic. Trade Republic is our top pick overall. It offers a 3.75% interest rate, and it is the only one that offers a deposit guarantee scheme up to 100k euros. We consider Trade Republic the best mix of the highest interest rate and the safety of your deposits. Now we are in the Trade Republic website, and as I said, Trade Republic is our top recommendation for balances up to 100,000 euros. They offer a 3.75% annual interest rate on euro balances. The interest rate is calculated daily and paid monthly, and you can withdraw whenever you want. They also offer a debit card with cashback. So while this is not the highest rate out there, Trade Republic is now a bank, meaning that your assets are covered by a deposit guarantee scheme up to 100,000 euros, or the Germany's deposit guarantee scheme. In case of any financial issues, this entity should return up to 100,000 euros per holder within 7 days. You should note, however, that you should also account for taxes in your home country, so the rate might be reduced. Also, there is a limit of 500,000 euros in some countries where Trade Republic operates. Above that amount, you probably won't be able to earn interest, but please check your country details. So our next choice goes to Interactive Brokers, or IBKR. We consider Interactive Brokers the second safest alternative, and we recommend it only for business owners and people with more than 100,000 euros to invest. Yes, you can open a corporate account at Interactive Brokers. So now we are in the Interactive Brokers website, and they offer an interest rate of around 3% annually on your euros. You can scroll down here to check what your rate is. The interest rate is calculated daily and paid monthly, and you can withdraw whenever you want. However, there are two important caveats to be aware of, which is up to 10,000 euros, you will earn zero interest. And up to 100k, you will not earn the full interest. You will earn interest proportional to your account size. So you can scroll down and use the Interactive Brokers interest rate calculator to see how much you can earn. So let's put this example. Let's say that you want to invest 50k on Interactive Brokers in euros. The net asset value is the same. You can calculate, and as you see, the interest rate that you would get would be much lower than the one offered by Trade Republic. So basically, if you want to benefit from the full rate, it's best for people who have more than 100k amounts to invest. In terms of protection, IBKR's protection varies depending on the subsidiary of your account and your country. Your euro cash isn't protected by a deposit guarantee scheme the same way as Trade Republic, which is a big downside compared to Trade Republic. Despite this lower interest rate, IBKR is a publicly listed company. It has a long track record and is highly transparent. They offer the European Central Bank rate, which is mentioned here. And they basically, what they do is they take a 0.5% fee. And while other providers might offer higher rates to attract new users, Interactive Brokers' model is sustainable. and is transparent, making it a solid long-term choice. In my view, users should choose a provider that they can stick with 10 years down the line as their investments grow. While Interactive Brokers is not a bank, it is one of the safest online brokers in Europe, making it a good alternative for your investments. Now, there are other noteworthy providers that you should consider as well. In this case, we will present Trading212, Lightyear, and Wise. These companies offer competitive rates, but they are not banks, and they will invest your money in money market funds, which by definition are not covered by the deposit guarantee scheme. Still, they are worth considering. So first up, we have Trading212. Trading212 offers very high rates. They offer a 4.2 interest rate. And what they do is basically they will invest your money in a money market fund, which is expected to return around 3.8% annually. Trading212, for this reason, is likely losing money by offering you a 4.2% rate, making this a customer acquisition cost. However, this could not be sustainable long term, and they maybe have to find another way to monetize their users. So next up, we have Lightyear. Lightyear is a recent investment platform. It's based in Estonia, and it's growing a lot in Europe. So this is their website. As you can see, Lightyear offers a 3.62% yield. They offer a 3.62% rate on your deposits. This is the rate you will get after their fee. So basically, they charge a small fee, like a 0.25% fee, and the remainder goes to you. And finally, Wise. Wise is a digital bank similar to Revolut. And as you can see, they are offering a 3.45% interest rate after taking their 0.27% annual fee. So this works both for companies as well as for individuals. So, and while this rate is competitive, again, remember that these funds are not covered by a deposit guarantee scheme. So you might be wondering, how are these providers able to offer these rates? And the answer is, it depends on the provider, on the platform. So in most cases, your uninvested money is placed in a deposit within a financial institution, and the interest rate is dependent on the central bank's policy moves. So for instance, last month in June, the European Central Bank has decided to cut interest rates by 0.25%. So it went from 4% to 3.75%. As such, many brokers announced that they would follow suit and reduce their rates. The rate we refer to is called the deposit facility, the interest rate banks earn when depositing money in the European Central Bank. So in practice, a broker, by offering you a lower rate, is taking a fixed fee in the difference. So if the European Central Bank rate is 3.75, the broker gives you 3%, they get 0.75% for them. In the case that they are offering you a higher rate than the rate offered by financial institutions, they could be losing money, which can be seen as a marketing cost or a user acquisition cost. And is it safe to leave your cash in a brokerage account? This is by far the biggest concern among investors or savers, is the safety of their funds. Banks have long been seen as the best place to keep cash, as there are many protections in place across European countries, such as the Deposit Guarantee Scheme, that protects customers' deposits up to certain amounts, depending on the country, in the event of a bank going bust. But did you know that some of the popular brokerages across the European Union are also covered by the Deposit Guarantee Scheme, as they have forged partnerships with banks to manage clients' funds? Essentially, this means that your cash is just as safe with a high-interest brokerage account as it would be on a deposit with your bank, provided that the brokerage account is covered by the Deposit Guarantee Scheme. Similarly, many clients of US brokerages are covered by the SIPC insurance. Before you put your money on a deposit in any broker savings account to earn interest, it is prudent to check the broker's policies and to check if it is covered by a deposit guarantee scheme. So, in summary, it is important to focus not only on achieving the highest rate possible on your euros, but also making sure that the broker is doing everything possible to keep your funds safe. I hope this video helps you find the best platform to earn interest on your euros, and remember to read the full article linked below for a more detailed comparison and updates. If you have any questions, feedback, or need further clarification, feel free to leave a comment below or contact me directly on LinkedIn. Thanks for watching and see you next time.